Live from Orlando, Florida. I'm Adrian Manns at the Money Show. I'm here with my friend Mike Larson. We're gonna talk this time about metals and about gold in particular. And you're the editor at the Safe Money Report, and you're not a big gold fanatic. You're not a chasing gold, and I know a lot of people are like gold. That's the ultimate investment. But recently, you've got some thoughts to share, let's say.
Sure. Like I said, there are gold bugs, and then there's people like myself that are more generalists. And I'd like to say there's times I love the metal, there's times I hate the metal, and there's times when I don't really care what it's doing because there's other more promising investments elsewhere. But I think when you look at the forces that are lining up behind precious metals, and really have been since the mid-2018 timeframe, they're very powerful. If you look at the low, negative, zero interest rate environment we're in, one of the old knocks on gold and silver and metals is that, look, it doesn't yield anything. Why wouldn't I want to own a treasury bond and pick up 1 or 2% and so on? But in so many parts of the world, those treasury bonds don't even yield 1%. They don't even yield 0%. They're less than 0. So that actually makes gold, in some ways, a high yield alternative, or a higher yield alternative. I think secondly, you have a need for what I call chaos insurance. Really since the first quarter of 2018, there's been a slight uptick in volatility. We've seen some parts of the credit markets get a little more trouble. It's some of the most marginal corporate credit. So people are starting to look for a little more protection, especially this far into an economic cycle. Gold also prospers in that environment. So you throw in central bank buying. Central banks used to be big sellers of gold and silver for gold as reserves. Now you're seeing more buying of that. All of that really lines up behind gold as an investment that people are very, very underweighted in.
Okay, so you're on a panel here today talking about gold. What's your sneak peek and what you're going to be talking about there, maybe?
Sure. I think, I'm going to focus a lot on sort of how gold is one of the few undervalued investments out there in this ocean of overvalued assets, whether it's junk bonds, commercial real estate to some degree, stocks, and so on. So you got that going for it. I'm going to talk a little bit about what central banks have been doing, again, becoming active buyers of gold as opposed to years ago being big sellers. And there's a few names in there. I mean, if you're looking to invest in this space, an ETF's a great place to start. Something like the GDX owns, the major gold mining companies and so on. But there's individual names and subsectors I like even more. Wheaton Precious Metals, for example, ticker symbol WPM. They're what's called a royalty or streaming company. They don't own one gold mine or 1 or 2 gold mines. They really are more of a diversified way. They help finance multitudes of gold properties and silver properties all over the world, and they collect royalty from the income that those mines produce, the gold that they sell. That's a kind of a nice entryway to have a diversified play, and I'll talk about that and some of the other companies as well.
Cool. Well, I know my 12-year-old son already has his eye on investing in gold, so it's going to be what it is. Let's hope he's right. Let's hope he's right? So I'm gonna say goodbye. Thanks for joining me, Mike Larson. You can check him out at thesafemoneyreport.com or
WeissRatings.com.
WeissRatings.com. There we go. So live from the Money Show, I'm Adrian Manns. Thanks for joining us.